Hello everyone and welcome to the long-term goals for gold, XAUUSD. This is just going to give you patterns to look at and in the long term, what we are following, what levels to look out for, and what signals and confirmations you could be adding into your own analysis. So we're going to start on the monthly chart and go down to the daily, and I'll show you patterns on each level. Right, let's just jump into it. So here we have a support line, the white line here, and as you can see there's a nice wedged pattern there, then we fall down, little lump, come up the other side, and we broke above the last wedge patterns. So we went above, come back down to retest it, and we're likely to go more bullish. So when we get a horizontal line out, you can see we came back down to retest the height of these last three highs over here. So that was a good area we was looking to pivot at, along with lots of other confirmations. So that is one good confirmation that we are going higher. When I go to the pictures, this is the pattern we are following. Don't really have a name. I call it two wedges and then down into a bowl with a lump, and then come up the other side to the same height with a wedge to finish off the pattern. When the price comes up to the other side and goes above the height of the previous wedges, then it will go double the height of the previous wedges. So what that means is, let's jump onto the chart and I will show you. Just find the part I am talking about and I'll show you what I mean by that. So here we have the same pattern. Stick a support line in here, I will. So we have, get that straight. So here we have, that could be straight, that's fine. So here we have the same pattern playing out, but it broke above the previous high and went double the height. So this is the support line at say 1700. Here's the first wedge, here's the second wedge. We fell down into the bowl, came over the lump, came up the other side, a nice little lump there, and then broke above the previous high. It went, so this high was 1710. The support was 1700, so that's a $10 move. So you're expected to go to 1720, and if we go up to this side, we went up to exactly 1720 before going sideways. So that is kind of what we're expecting to see on gold. That would be the big bullish movement over the next few months. Let's go to the pictures. That's just illustrating the part I just spoke about. So when we go to the actual chart and go back to the monthly, you can see this is the height of the previous wedges. If you go on this one, it will give you this line here. That is the bare minimum we are going up to. If you do this height to the support, then it will give you that green line. These are just rough estimates. So it won't be exact, but it'll be around that price. So that is the bare minimum and maximum of this pattern we are following on the monthly chart. Right, let's go on to the next one. Megaphone pattern. I'm sure you all heard about it before. So when we go down to the daily chart, you will see this kind of pattern being followed. Let's get rid of that line now. And this is the pattern being followed on the daily chart. It is a Megaphone Continuation pattern. Just Google it and the picture will come up. So if you put, let's get rid of these lines, that line, and we will get a new line out. So that is your support of the Megaphone pattern, which runs along there. Something like that. stick the rays on just like that, and then we will have another one moving up here, something like that. So when we go to the weekly chart, you can see it much clearer. So this is the Megaphone pattern. You have point 1 here, 2, 3, 4, 5, consolidation, breakout up, and then we come back down to the height of point 5, which is here. So that is why you got to pull back to the height of point 5, and now you're seeing the turnaround and a bullish movement to continue above the height of this last high, which is at the highest high, which is at 2000 and let's leave it there, 2070s. So that is another area to aim for. So this is what it means. There is point 1, 2, 3, 4 and 5. Consolidation sideways, breakout up to the upside, pull back to the height of point 5, and a continuation upwards to finish the pattern. So as you can see on this pattern, it goes up to the height of the big bullish movement, and that is 2070 on gold. So that is one pattern you can be following. Let's get rid of that. If you like to trade a bit of order blocks and OTE, optimal trade entry, then you could have a bullish order block along there whenever it fits up correctly. Something like that. So there's your bullish order block. You have a bearish order block here and a bearish order block here to profit off the pullback. So this is the main bullish order block that has been retested and validated and continued the upwards movement. When we want to do a optimal trade entry, you use that bullish order block to pull your fib from there to the highest point. That is the last swing low to the highest swing high, well, the last swing high. Get your fib out, and then you put it on the lowest wick to wick, which will roughly be there, which gives you a nice optimal trade entry around this level. As you can see, the bodies are around the 70%. That is a perfect example of an optimal trade entry. They are layering their most of their orders are around this level. So as they were coming down, they were also buying into the market. So what that means is they can do bigger orders. So they could do, like, say, double, triple their. So if they're selling at, say, 100,000, I know it'd be a lot. So 100,000 lot size down to push this price action down. They will also be adding in their buys of, say, 100 lot size for the big movement up. So within these two candles, there are a lot of bullish orders for the big buy up, because they know we are coming down to the pivot point. They know things are likely to go bullish next. They will be making things go bullish. So once they push price down here, they will literally simply close their sell orders and they will have their buys sitting in here already. But that is a way for them to put bigger money into the market at the same time as selling. Anyway, off the subject. So optimal trade entry also gives you a first take profit at 2070. Then we just go up and label these targets. So then you have 2180. Second target would be 2300s, and the maximum swing would be 2470. This is why some people are saying, oh, it's going up to 2300, 2500. that are literally simply trading off that concept. And to give you a little preview, here we have the last bullish run. If we do a optimal trade entry from the low point to the high, it will in fact show you that exact trade. So that is literally dragging it from the wick down here all the way to the wick of 0.5. Will give you that swing high level. So that is the maximum they would have been trading to. So that is why you get these levels here, and these levels are respected, because most institutions are trading like this. So right, optimal trade entry, Megaphone Pattern, and the bigger time frame pattern gives you these levels to watch out for. There they are, all on one screen. In my opinion, I will be looking for at least 2070 on my buys, but I will be targeting around a 2100 plus, depending on how price action is behaving around at this level. I will be holding to at least this one here, 2170, and aiming for above. So my stop losses would be above 2070, and I will be targeting these levels above here. And I will be looking out, what I do is look out for clues along the way that price is starting to reverse on the bigger time frames. So not on the 1 hour or 4 hour, it will be on the bigger time frames. You will see reversal patterns emerging and giving you little clues that price is now breaking down, market structure is turning, and things are likely to go down. In the long run, so over the next year, in my opinion, just like on the wrong picture, just like on this pattern here, you can see after price went double the height of the two wedges, it then came all the way back down to support. So when you go to the actual chart, that support is all the way down to 1570 mark. So I will be then trading my bias to come all the way back down to 1570, but that is on the long run. Over the next few years, that would be, in my opinion. A lot can happen till then, but I hope that gives you a lot to add to your chart to focus on. And this main video was to give you some long-term targets to aim for. Like I said, from this 19 is the bare minimum. We've already touched that. In my opinion, the bare minimum is this new high at the moment. So the main focus is to get in your buys and aim for that movement. Hope that helped out. Take care. Have a good Christmas. Goodbye.